Yo, it's your boy, the insurance junkie, your fiduciary fellow, the all-star advisor Alonzo Hall. Now return today with another ADH Wealth Solution. Today, we'll begin to discuss fulfilling all of your financial needs. To contribute to channel growth, the links are in the description. To schedule an appointment of your own, or to purchase life insurance directly up to $1 million with no medical exam and an instant decision, my information is in the description. Lastly, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. And now, here's our next feature. Salute. Today we're taking a look at another article and we're going to learn what is an ETF, Exchange Traded Fund, because a lot of people talk about it, but they have no idea what it is. So, an Exchange Traded Fund, ETF, is a basket of securities that may consist of stocks, bonds, commodities, real estate, or other financial assets. By design, ETFs strive to offer more liquidity and trading flexibility than other investment vehicles. That is because they are bought and sold on an exchange, much like individual stocks, where supply and demand continually dictate sales prices. Investors can make trades during normal market hours in response to new market conditions or changing expectations. ETFs also serve as a versatile asset. They are structured in a way that lets investors target a specific category of investment, such as an asset class, sector, or geographic region. For example, marijuana stocks. Many ETFs track a specific index focused on a market segment, such as the S&P 500 index for U.S. large capitalization stocks. Such funds are considered passive investments because they simply mirror the composition of a particular index. An actively managed ETF, on the other hand, offer the opportunity to beat the returns of an index because an investment manager selects which securities to own in the portfolio. Even if the fund focuses on a particular market segment, the manager has the discretion to determine which securities to own. Investors are drawn to the structural characteristics of ETFs. They have a tax-advantaged design. Because of how they're structured, ETFs generally do not issue the annual taxable capital gains distributions that mutual funds do. Portfolio transparency. ETFs report their underlying securities on a daily basis, which means investors immediately know what they're holding. Low turnover. Since ETFs track indexes or baskets of securities, their internal turnover of securities in the portfolio is generally lower than the rate for actively managed mutual funds. Targeted exposure. Investors can use ETFs to dial up or down their overall portfolio's exposure to different markets, styles, sectors, themes, or strategies. Liquidity and flexibility. Investors can buy and sell shares on exchanges throughout the trading day, while also implementing different strategies such as buying on margin, short selling, and placing various order types. Accessibility. ETFs provide access to asset classes such as certain types of commodities that were previously available only to institutional investors. Lower ownership costs. Passive investments which track on an index or sector may have lower expense ratios because simply mirroring an index is less costly than having a team of investment managers evaluate and select securities. Investors should be aware of the material differences between mutual funds and ETFs. ETFs generally have lower expenses than actively managed mutual funds due to their different management styles. Most ETFs are passively managed and are structured to track an index, whereas many mutual funds are actively managed and thus have higher management fees. Unlike ETFs, Actively managed mutual funds have the ability to react to market changes and the potential to outperform a stated benchmark. ETFs can be traded throughout the day, whereas mutual funds are only traded once a day. While extreme market conditions could result in liquidity for ETFs, typically they are still more liquid than most traditional mutual funds because they trade on exchanges. Investors should talk with their advisors regarding their situation before investing. Investco does not offer tax advice. Please consult with your own tax advisor for your information regarding your own tax situation. While it is not Investco's intention, there is no guarantee that a fund will not distribute capital gains to its... Hey folks, this last video was sponsored by my company, where we help people like you to reach their financial goals. We do this through a simple conversation where we help to identify and then protect your lifestyle, and then we implement a plan. The process starts at about an hour. So, if you want more information, or you want to schedule a consult, contact me via the information in the description box, and let's talk and see if we're actually a great fit for each other. And remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Thank you, and enjoy life.